Mohit Gang joins us this morning, co-founder and CEO of Moneyfront, to just help us understand what should one expect in the next few trading sessions. Mohit, expectedly, the US Fed has cut interest rates. India's IT sector is reacting positively. But beyond that, no movement at all in the markets. What are markets waiting for?
Thank you and morning, Kartik. Always a pleasure to be on your show. Look, I think yes, a rate cut from Fed was well anticipated, and I think markets will take it well in stride. And I think US markets have shown a positive ending yesterday night. My sense is India is still going through a structural. I'll not say structural. India is still going through a liquidity churn right now. Honestly, for Indian markets to perform well, we need few. Parameters to actually work very well. Rate cuts is one part of it. Even in India, the RBI is consistently on a path of cutting down rates, and US has also shown us the way. Having said which, I think the market in the short run is looking at more liquidity, Karthik.
Okay.
And my sense is the primary market inflow is so high in the markets right now that it's kind of absorbing every inch of liquidity which is available. And that's the reason perhaps that secondary market has not been able to inch up or is not finding enough liquidity to kind of mop up the selling which is coming through. So I think unless and until the primary market flows kind of halt a little, along with the other parameters, along with your rate cuts coming through, your macros remaining stable, and a nominal growth of India inching up a little, which means inflation coming up a little. I think those are few things which we will look forward to.
All
But the
right.
primary market and the nominal growth, to my mind, are two of the biggest drivers right now in the market.
Primary market and nominal growth rate, well, of course, and for that you need inflation to actually tick up. But, there's also this concern, Mohit, about IPOs and the barrage of IPOs that we've seen sucking out liquidity from at least retail investors, or as well as DIIs for that matter. Is that a real concern at this moment?
Oh, absolutely, absolutely. Look, I think there are two or three points about it. Number one, as I said right now, it's sucking out liquidity from the market, and the secondary market is not finding enough legs to stand on its own. The primary market flow is extremely high. Look at just case in point being, let's say Swiggy QIP, 10,000 crores getting mopped up, and I think the subscription was hugely oversubscribed, right? So the every day on a daily basis there is an event where 10,000 crores are just going out of the market, which is not a small sum of money, Karthik, right?
Absolutely.
So market has only that much liquidity, and if the primary flow takes up all the liquidity, then there's very little left for the secondary market. So my sense is we need some and I don't know how and when will that happen. We need some bit of secondary money to actually prop up the market. So that's what we will have to wait out for. We can't stop the flow of IPOs. Plus the quality of IPOs, the pricing at which they are coming in, honestly leaves very little on the table for retail investors or for any kind of investor. There has to be some method to madness out there. It's absolutely crazy the way few IPOs are getting priced in the market, and way those are getting lapped up also. So honestly, it just drives me crazy seeing those numbers. But that's
Right.
that's the reality of the market.
Absolutely. Well, of course, from IPOs, let's just go back quickly to IT stocks for a moment, Mohit. And IT stocks likely to be the biggest beneficiaries of the US interest rate cut. But at some point, the cut in interest rates is targeted at US inflation. Do you think this 25 basis point cut is actually going to become a driver for US-based companies to also start investing and making those bigger commitments towards their processes? And is there a story here for the Indian IT sector, or is this just sentimental uptick that we are seeing right now? Because IT continues to be a pain point, given the fact that AI has pretty much disrupted the entire game already.
Karthik, look, I've always been a firm believer, and I think on your show itself, I've always maintained that IT sector is very highly geared to rate cuts in US and in India both. It's an extremely sensitive sector to US rate cuts, given that bulk of or the big boys of Indian IT kind of thrive on US export of services, right?
Yeah.
So that's a big driver for them. And as US companies improve their bottom lines, a bulk of that goes into IT because US is a heavy spender on IT innovation and all kind of IT enabled services,
Right.
and which is where the bulk of the earnings for Indian IT sector also comes through. So my sense is yes, a rate cut augurs very well. And yesterday's commentary, though, kind of raises the bar higher for further rate cuts, but it hasn't completely eliminated the possibility of a rate cut. Honestly, I think I found the commentary very neutral, and my sense is two rate cuts are there in 2026 for taking, and if we see a change of Fed governor mid of 2026, then perhaps, and if someone from whom Trump favors comes in
Yeah.
at the helm, then possibly you might see a better rate cut. So my sense is IT will start picking up now in that possibility and anticipation.
Right.
And US companies have any which ways been going strong, and rate cut further adds to that momentum. So my sense is it's perhaps time to start looking at IT again with a view of rate cuts and corporate profitability getting strengthened both in India and in US.
Right. One quick follow-up to that, Mohit. Do you think one should look beyond the Nifty 50 IT pack, and should one look at companies like, let's say, Persistent and Coforge, which are reacting a lot more favorably to the US Fed rate cut than the bigger sort of, in fact, TCS has gone into the red this morning right now, but Persistent up about 1.6%, Coforge up about 1.6% or so. The slightly mid-cap IT stocks, is that going to be the next driver of growth for India's IT investors?
Oh, absolutely. I think mid and small cap IT is the way to go. Honestly, I think the big boys sit on a huge pile of cash, and they've not been able to allocate capital efficiently for a very long while now. And they've been finding ways and means to do that, but it's not sufficient from a market's perspective. And my sense is more value is to be found in the mid and small cap space on the IT side, where you will see newer names and bigger names emerging pretty soon. So yes, definitely.
All right, Mohit Gang, thank you so much for your time this morning and for sharing your views on which way the markets and especially the IT stocks are headed from here. Thank you so much for your time.